So, with that being said, we are live. We are live. Welcome to another market outlook with the Traders Guild. Today is June 11th, 2023. And for those of y'all that do not know, my name is Maverick, and we do these market outlooks every single Sunday at 10 p.m. Eastern. We just go ahead and get a feel for what's going on in the markets, what to look out for this week, not necessarily maybe signals per se, but more so on an educational level and just an outlook level of what signs to be paying attention to, what price levels to be paying attention to, as well as looking at any major news events that we have coming up this week. So that we can actually be aware, because at the end of the day, you can't buy a car if nobody's selling a car. You can't sell a car if nobody's buying a car, aka we need to know when liquidity is coming into the market. So that's why we like to start off with the news events, different high impact news events that's going to be showing out. And this week we also will actually be diving into not only the high impact news events, but I actually want to bring up a couple different news articles and a couple different headlines that are swimming around the room as of right now to back up some of the things that I'm about to say. So last week we kind of just dived straight into the charts, straight intraday perspective. This week, we're not only going to dive into the charts and the intraday perspective, I also want to go ahead and look a little bit at some of the higher time perspective, and a little bit about what's going on around the world and economy to back up what it is that I'm giving to you guys. So I'm going to give some charts. I'm going to give some news, some high impact news, some institutional vibes. But at the same time, I also want to make sure that we as a community are prepared. All right. So with that being said, let's go ahead and dive into it. Right. Another market outlook. And like I said, I got a little prezi for us today. Again, another Sunday market outlook. First and foremost, disclaimer for anybody watching this video: nothing that you see on our channel or in the server with our community is to be taken as financial advice. This is general information and educational information only. We're not, soliciting anything. We're not selling anything as far as contracts go, as far as securities go. These are not recommendations, and I am not a financial professional. All right, we are simply providing educational information, as well as just from our own experiences. And I just want you to understand that past performance does not necessarily indicate future results. Okay, so always right? Always do your own research. Okay, so that is that. Let's go ahead and move into it. All right, first things first, couple updates on the YouTube channel this week. We did go ahead over the last 2 weeks. We'll start releasing our Intro to Institutional Concepts playlist, which will end up being a full-length course, which we're offering to the community for free, right? For those of you guys that are part of the Traders Guild, but not only the Traders Guild, we have it on the YouTube public library. So anybody who needs that, you can get access to it. The first 2 videos are up on the page. Highly suggest, and I'll go ahead and link them on the YouTube video somewhere here so that you can go ahead and click that and get access to them. Okay, but at the end of the day, the first video was what our new traders should be focused on, and the last video I went over the keys to market structure and the different ways, different types of traders and styles of traders when it comes to approaching the markets. That part. So the next video will be the kill zones, different kill zones, aka the sessions, and when are the best times to look for opportunities in the market. Okay, because at the end of the day, you got to remember that it's not just about where price is going to go or where we want to get into price. It's also about getting into price and price delivering at a certain time. All right, so always want you guys to be aware of that. And like I've already, said, if, the link will be in the description. If you want access to these market outlooks live, you can go ahead and hit that link and join our free server so that you get access to our weekly market outlooks for free, as well as our weekly watch list where I drop all the ideas we talk about today. Sound good? And of course, shameless plug, right? Shameless plug. If we're going to be giving all this value, we want you to know that ending July 1st will be the beta access to our private community and coaching. All right. So right now it's only $50 on a month to month, $450 on a year. But the price will be continuing to raise to where it deserves to be based on the level of value that we provide as a community. All right. And for everybody a part of the community, definitely watch out. Monday and Friday, we got the Q&A sessions dropping at 6 p.m. So The event will be in there, and you can hop on, ask whatever questions is that you have, bring whatever charts it is that you need to bring, or whatever it is that you need some help going ahead and sharpening up so that you can continue to become a profitable and consistent trader. All right. And then, of course, Tuesday through Thursday, we do our post market analysis as long as the market didn't not do anything. Okay. Real quick, for this week coming up, we do have a very interesting week coming up, a very volatile week coming up. One of my coaches would call this a minefield, is going to be going down this week. We don't have any major news this week, and you guys can go to investing.com. That's where I use to get access to these news releases. Investing.com, there's a number of other ones. But as of that, the economic calendar for this week, on Tuesday, we're going to be seeing CPI release, which is going to be the inflation rates for the week, or for the month to month and on the year to year, but just dropping this week. Now, we're forecasted to see inflation coming out at a lower rate than it came out last month. And I don't know why it's not here. We'll double check when I pull up the browser. I'm not sure why we don't see on here what the forecast is for the year to year. But last month's, April's year to year was at 4.9. So we're up 4.9% in inflation since last year. So just understand the relationship between inflation. We have it in the forum for any of you guys that's a part of the Traders Guild, a member of the Traders Guild. We have a document, just search it. It's called Inflation versus Interest Rates. But the inflation has a direct relationship with interest rates. And interest rates has a direct relationship with the US dollar. And for those of y'all that are not aware, the US dollar, it has a very strong control, or very strong effect, correlation when it comes to the foreign exchange market, and relative to the Dow's, the Dow, Nasdaq, SPX 500. It's an indicator, right? When we see what price is doing as far as the dollar goes, it gives us an idea of what we can look for in anything that correlates with it going the same direction, or anything the opposite of it, inverse of it, going the opposite direction. So what you want to understand is that just from having an idea as to how inflation affects the markets, you can kind of get an idea for what's going to continue to go on when it comes to the markets overall. All right. And I'm not going to go heavily into that. One of our market outlooks, actually, I went into it. But yeah, we're going to leave it at that. But just know that inflation rates being higher, they are continuing to raise interest rates because they need to combat that inflation, right? At the end of the day, if inflation keeps going higher, your money keeps losing value. So if you got savings and inflation just keeps going up, your money, it just keeps going down in value. Just like how, couple, 10, 20, couple decades ago, $40,000 was worth way more than $40,000 is worth right now, right? It's the same thing. That's inflation. So the more that inflation rises, our money becomes less valuable. So the central bank, what they're going to do is they're going to raise the cost to borrow money, right? They're going to raise the cost to borrow money, aka the interest rate, so that they can kind of hedge the inflation rate. Okay, so that people are spending less, right? Because if people spend less, it makes the money more valuable, right? Supply and demand. So naturally, on Wednesday, after inflation, we're going to be actually having the interest rate decision. Now, that interest rate decision is forecasted to be the same as it was last month. So pretty much they're forecasting that the interest rates will not be raised again. Now, mind you, for the past about 10 to 12 months, I believe it's longer than that actually, but yeah, for the past at least 10 to 12 months, they have raised the interest rate every single month. And if you see this little this little audio button right here, if you click that button, it will take you to the actual press conference. And all of these press conferences are on YouTube. And if you watch the press conference, usually this man is lying. Usually you can't trust what he says. But I want you to understand that he has literally said over and over and over and over again, they will continue to raise interest rates as long as they have not reached their objective for inflation. And the inflation objective is 2%. We're at 4.9. It's not going to be 2% when it comes out on Tuesday. So me personally, we're going to continue to see higher interest rates. and I'm continuously bullish on the U.S. dollar as of right now, at least, right? And I'm gonna back that up with a couple facts. And the reason that we're even gonna talk about this is I know we intraday traders, you guys want to pass funded evaluations, dot 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 dot. But it's not just about passive funded evaluations. It's not just about withdrawing this week. It's not just about hitting the TP. It's about the skill set of trading being a reliable source of income. That reliable would mean that like you could, project yourself to be able to make an income over the next 12 months, maybe 24 months consistently to feed your family. If not, it's a quick lick and not reliable. Understand? So by understanding what I'm about to break down about the economy, it might give you a little bit more security like it's given me when it comes to anticipating the markets, right? And working on those anticipatory skills, just having a higher projection of what's going to go on. So I believe we will continue to see higher interest rates this week, as well as increased inflation, but we'll see how it plays out. So that's Tuesday and Wednesday. Following that, right after the U.S. released their interest rates on Wednesday, on Thursday, the European Central Bank will actually be releasing their interest rates, and they have made it very clear that they will continue to raise interest rates regardless. So we have that projected at coming out at 25 basis points higher. We'll also be having some normal U.S. dollar news on Thursday. Thursday's probably going to be the cleanest trading day of the week. If you can like stand it, you probably be better off just not trading until Thursday, right? Just to put it down like that. Because when you have crazy stuff going on like CPI on Tuesday, FOMC on Wednesday, especially if you're a beginner trader and you don't have a strategy that you feel confident about in those type of conditions, I have realized and learned in my own experience that following CPI and FOMC in those type of weeks, the markets deliver so clean because all the dead bodies are gone, right? All the people who wanted to risk their whole account on CPI or risk what they thought they were going to get right on CPI or FOMC, and then the FOMO hits because it happened so fast, or slippage hits and so they blow their account, they're gone. And so the markets deliver to where they may be expected at 2 cents on Thursday, when we get Philly Fed Manufacturing Index. All right. And Friday, we'll be seeing the Bank of Japan's press conference, where they will probably be addressing their interest rates, or at least what they plan to do with those interest rates continued. All right. So it is definitely going to be a very volatile week, very, very volatile week. And we will be addressing what type of volatility we can expect, or what we're looking to see from that volatility, as we go ahead and dive into our charts and our analysis on the charts this week. All right. Oh yeah, I told you we got a little mini Prezi. Don't be surprised. We got a little mini Prezi. So now we're gonna go ahead and shift, because after that there's no more Prezi, guys. That's all I had. Okay, so we're gonna finish that thing up. We're gonna finish that thing up. Don't worry. But from here, what we're gonna go ahead and do is we're gonna slide over to the internet. All right, and bear with me, YouTube. I know y'all just saw a lot of stuff going on. That's because I'm still getting my bearings when it comes to the OBS. All right, so y'all bear with me. But let's go ahead and get over to Brave browser. So check it out, right? Check it out. So a lot of different headlines that I want to highlight today, right? And the reason that I want to highlight these headlines is because just to be honest with you, I feel as though we've been saying this for a while now. The Dow has been bullish, NASDAQ has been bullish, SPX 500 has been bullish. We've been seeing a lot of bullishness when it comes to the investments market in the United States, right? And probably around the world, you could say. Despite us having higher and higher inflation rates, higher and higher interest rates, we've continued to see people buying into, these stocks and investing in these stocks. And as I'm about to point out, with the employment rate, we've seen people continue to, get employed, higher and higher, payroll rates, the lowest employment rate since what, 1969. Things are not really in alignment with a slowing down economy, right? The reason that they're raising interest rates is to slow down the economy. They want people to make less money and borrow less money. But if jobs are increasing and unemployment is going down, that means the economy is not slowing down, which means inflation is not slowing down, right? So that means they most likely will not be lowering the interest rates. People are continuing to invest their money, and they're continuing to invest in these companies and buy things, and spending is continuing to go rampant, right? Because people, for some reason, the narrative that you're going to see once I pull up these headlines is that, you know, the Fed is not going to continue to raise interest rates, and that is very, very far from the truth. I feel as though people are over leveraged as a whole, right? When you talk about stocks, I feel like the people are over leveraged. When you talk about housing market, people are over leveraged. When you talk about cars, debt, credit cards, student loans, the people are over leveraged, especially coming out of the pandemic. Everybody felt invincible. You understand? So the people are over leveraged, and what over leveraged mean is they have a lot more money in than they can stand to lose, right? So if interest rates continue to go up, right, that means that people are going to have to a lot more debt to pay back. And if they don't have the money to pay that debt, the first thing that starts to go is your assets, right? I'm talking, we're leading into potential recession, right? And I think a lot bigger recession than what people expect. We're leading into foreclosures, right, on homes, right, crashes in the stock market. And trust me, I'm gonna back up every single thing that I'm talking about today with facts, all right, with news and with the charts. All right, so let's go ahead and let's dive in. All right, first and foremost, from CNBC News, right, we have them reporting here on last Thursday that jobless claims increased more than expected to their highest point since October 2021. Something sounds a little fishy, right? You know, we're having people claiming we have the highest level of jobless claims since 2021. But for some reason, at the same time, we're at the lowest unemployment rate since 1969. That doesn't add up to me. It's a little weird, right? It's just a little bit weird. Jobless claims totaled over 261,000 for the week ending in June of June 3rd, which is a 28,000 increase from the week before. And this was way ahead of what the US 30 estimated for 235,000 being the highest weekly rate since October 30th, right? That's pretty much the facts. And I'm not going to go into this article, but let's just leave that one right there. All right. CNBC also reported that consumer debt passes a $17 trillion for the first time, despite slides in mortgage demand. So basically, we are borrowing more money, right? We are borrowing more money as a people in the country than ever before. All right. Even though when you look at mortgages, people are not, borrowing more and more on their homes. All right. So you can keep that in mind. So jobless claims higher than since the highest ever since October 2021, and consumer debt at 17 trillion, which is the highest of all time. All right, so we gonna go ahead and hold on to those two. All right. This article here is talking about home closures being on the rise nationwide, Florida, California, Texas, right? And I was just talking about the foreclosures, right? Let's see. It says the recent increase in foreclosure filings nationwide indicates a trend that has been observed throughout the entire year and what we have expected to occur. This upward trajectory suggests the possibility of continued heightened activity, with foreclosure completions seeing the largest monthly increase this year. We're going to continue to monitor this. So basically what they're saying in this article is that every single month foreclosures have been increasing. And I'm telling you this because I just said we are at an all-time high, right? We are at an all-time high of consumer debt, and foreclosures are continuing to increase. Why is that? It's because people are over leveraged. People are buying homes on debt that, on money that they got probably from COVID initiatives, and, people being able to easily get money post-COVID. They were doing stimulus checks, all of the nature, lower interest rates when we were first coming into the time of COVID. But guess what? As inflation rates continue to rise, inflation rates continue to rise, and the interest rates are continuing to rise. So a lot of these loans that people took out on these houses, the rates that they're having to pay back is going higher and higher than they expected when they got the house. On top of that, you got the cost of living going up every single month, right? People are not going to sit here and sit through that, and the banks are going to continue to buy out these houses, right? US economy added 339,000 jobs in May, beating expectations, right? So this is what I was just talking about, where somehow we have the highest amount of jobless claims since October 2021. But when I look at the unemployment rate, somehow we are around the lowest levels since 1969. This is what we would call on the charts a divergence, right? It just, something's not adding up, right? Smart money is in play. That's what divergence typically means for us as institutional traders, right? It means that smart money, right, big money, is making moves in the market. And I'm just showing you the words version of smart money making moves in the market, right? I found this very interesting. Biden, McCarthy, whatever, these guys pretty much are passing a bill they just passed a bill through the House of Representatives, and now it's about to go through the Senate. Pretty much this bill is extending the U.S. debt limit for the next 2 years. So if this bill doesn't pass, or if they didn't put this bill through the House and through Senate, which is probably going to pass because it's a majority Democrat Senate and stuff like that. But the whole point being that if they didn't pass this bill, the United States was going to default on its debt for the first time in history. So at the same time as I'm telling you that foreclosures are continuing to rise, U.S. consumer debt is at all-time highs. People are over-leveraged. Inflation is running rampant. The cost of living is increasing at an astronomical rate. At the same time, we look at this, the United States as a whole is this close to defaulting on their debts for the first time in history, right? And so they're pushing this bill through, and that would push back this limit, or the U.S. basically having to default on their debts till 2025. Very interesting things in the motion, right? And I found it also interesting, the things that would be passed in this bill, basically, right? A couple of the things that would be passed in the bill is that legislation would cap spending for the next 2 years, so they can't spend new money on new initiatives, right? That means they can't spend new money on food stamps. They can't spend new money on certain Section 8, for example, housing, right? Just these different initiatives that we have to support the economy. No new money. All they can do is move money around, all right? So check that out. Second, it's going to take over $28 billion in unspent COVID relief funds, right? First of all, where's this $28 billion? Because some of us still ain't even got our stimulus, all right? But they ain't doing it no more, right? They cutting back $28 billion off of that. They're eliminating $1.4 billion in IRS funding, so taxes who, right? And they're also going to restart student loan payments, right? So all these kids that just went and bought houses, they're raising the interest rates on the houses, cost of living is going up, and on top of that, you got to start paying your student loans off. I don't know, man. It sounds like a setup. It sounds like a setup to me, man. And other than that, it's going to move some things around when it comes to the food stamps. That's what SNAP is, food stamps, and help out a couple veterans and things of that nature. But for the most part, it's putting middle-class Americans into a bind, right? That's what this bill is going to do, right? So y'all check out a couple of these headlines, man. I got them all from CNBC News pretty much. And I'm just letting y'all know that it's getting real fishy in the water. That's all that I'm saying. It's getting very fishy in the water. And we're going to go to the charts, and we're going to go ahead and look at where we're sitting at right now. But at the end of the day, like I said, when we see divergence, right, things not adding up in the numbers, things not adding up on the charts, that is a sign. And when we see, a lot of these news releases are speaking very hopeful. I didn't want to take too much time actually reading through them, but a lot of these news releases are, talking about a recession and just saying, yeah, there's no way we're going to go into a recession, or if we go into a recession, it's going to be steep. I mean, it's not going to be steep. It's going to be shallow. It's not going to be anything crazy. They're also saying that this is a great time for the stock market. because we're seeing a rally in the stock market since October, since November, and that usually means that we're going into a bullish trend. That's the type of stuff they talking about in these joints. And I just really, if you guys don't remember anything I ever talk about, if everything I just said went over your head, I want you to remember this one phrase. That one phrase is read the room. Always read the room. That's all you ever have to do. Read the room. 95% of people are unsuccessful in business. 95% of people are unsuccessful in investing. 95% of people are they're not. 5% of the money is made by 95% of the money is made by 5% of people. And 95% of people make 5% of money. So if we're looking at these news releases and these news articles that 95% of people are probably reading, you just do the math, right? So sometimes you just gotta look at these things and you just gotta read the room, right? So hope y'all getting what we putting down, man. Hope y'all getting what we putting down. As far as last week, we did have an interesting week. Last week, the week started off very interesting. However, on our Tuesday post market analysis, I was pointing out how the dollar, and right now we're looking at the dollar chart. We had saw the dollar chart trade back above the weekly open because the week had opened right here. No, that was Sunday. The week had opened. Was that last week? Yeah, why is it bugging on me? Okay, yeah, the week had opened right here, June 4th, and then coming into Wednesday, we had climbed right back above the open of the week. The week opened at like 104.05. We climbed above that weekly open prime area for sellers, right? We climbed above the monthly open prime area for sellers, into a good premium. Took these areas of buy side liquidity here, gave us a lower low, and then we saw the pullback above the monthly open and the weekly open. So from there, I was anticipating to see us go ahead and give new lower lows below this daily sell side, and we saw them go ahead and deliver that before the end of the week, right? This is what it looked like on the daily time frame. Very legit. Just what was that? That was Thursday's candle. Literally swept that thing in a day. Even though we started off the week, as you can see, very consolidative, right? But once they went ahead and cleared above that monthly open and that weekly open on Wednesday, literally engulfing candle went ahead and took that low here on the daily, and we closed below it. So for the dollar, even though overall I am looking to go ahead and see us trade higher on the dollar, I can definitely see us see the dollar start off bearish to start the week, continue bearish just to start the week. But what I'm gonna do is I'm gonna highlight some areas. I'm gonna pull up a different DXY chart after I'm done doing the recap, and we'll go ahead and see what we're looking to anticipate going into this week. But yeah, last week hit all expectations we talked about on last week's market outlook, right? Seeing them trade above that monthly open. We had already just taken this daily or weekly buy side liquidity, and then on the daily time frame saw them start to trade lower, and so that's what we were looking for last week. On NASDAQ last week, we were looking to see higher highs, right? Higher highs come through on the market, and I'm gonna go ahead and let's see what's the prettiest way for us to look at this. I'm gonna go ahead and clean it up a little bit, get rid of my entry down here, rid of this, rid of that, right? So yeah, going into the week last week market outlook, we were here. This is where we were last week's market outlook. And our target was to see the markets go ahead and trade below the lows from May 31st, right? Trade below those lows, which also was below the monthly open, right? Here's May 31st. This is where the month opened, right? And my target was this weekly buy side liquidity, right? And if I go to a weekly time frame on my chart, you will see, right, that here's our face. This is our money man. And we were looking to see them trade above these highs, right? These weekly highs, these body highs. Now, of course, that's not where we were going into the week. But like I said, that was our anticipation. And of course, you can see we started off the week slightly bullish. We saw them make that dive down like I broke down on Friday's Q&A. And then straight, just literally, as soon as we took those lows, as soon as we came under that monthly open, dollar made the same move at the same time, and we went ahead and not only saw them go bullish straight to the weekly buy side, they straight gapped, right? They hop, skipped, and made their way to that weekly buy side liquidity, right? So that, yeah, it was a very clean opportunity on NASDAQ. I didn't call anything specific on gold last week. I don't believe, except in the actual server, but on Market Outlook, I don't think I called anything specific. But gold also made its move. The other pair that I spoke about last week was GBP USD. Seeing them pull back down into this 78% here, right? Because this was Monday. Seeing them trade down into that 78%, they gave us this order block. Wanted to see them respect that order block, this gray box here, respect that, and make a run for the buy side liquidity here, as well as trade above May open, right? Or trade up to May's open. And as you can see, that's exactly where we delivered to. So as you can see, last week's market outlook, even though we didn't get that one recorded, we were very accurate on that for anybody who was there. Now, the reason that this May open is so significant to me, this is May's open. If you can see at the bottom of my chart here, that's May 1st, which is this candle. And I felt that it was very significant because May's open took us above, May's what was this? May's close of last year, right? So this was the close of May last year. We literally swept up May 1st of this year, swept that buy side liquidity. Then we got an engulfing candle out of that area, right? When we see moves like that, that's kind of what I'm looking for in terms of sell opportunities on this higher time frame. So I wanted to see us come up to this May open to potentially now start being able to look for sell opportunities back to the downside, right? So we'll go ahead and dive into that a little bit more, but we are in my kill zone higher time frame wise for those sell opportunities. So once we go ahead and start breaking things down, I'm gonna go ahead and look at NASDAQ, I'm gonna look at GU, and again, same thing as last week. If y'all have anything y'all want me to look at, just drop it in the chat and I'll go ahead and politic with you, mastermind with you, and see what it is that I see as far as that goes. Another one Brian had pointed out last week, he was pointing out GJ, and GJ was another one that we went ahead and took a look at, and wanted to see GJ go ahead and trade back down to this daily order block right here from Thursday, May 11th. We wanted to go ahead and see them trade right back down to that level. Oh no, that's not the one we was looking at. Hold on, guys. I'm gonna get us right. This Monday is in the wrong place. It's throwing me off. Is this the right GJ chart? This is not the right GJ chart. I was like, this is not the right GJ. All right, cool. I started doing the market outlook from May. But yeah, so when we looked at GJ last week, we wanted to see her it's really the same setup as NASDAQ. Wanted to see her go ahead and trade below last week's lows, not last week's lows, but the previous week's lows, which was again from May 31st over here. And we could see GJ started off the week similar, went ahead and traded right below the last week's lows, started to give us some aggression, but didn't show us like any type of, we didn't see any engulfings, no order blocks, nothing like that. It didn't show displacement for real. But then you can see on this next candle, they dipped down there one more time here on 1 a.m. on Wednesday of last week. And then we got that engulfing candle right here that went ahead and gave us the order block. And then we had the clean entry on that next 5 a.m. candle right there into the order block, and then traded to, again, our money man, right? Buy side liquidity. So very clean setups last week, very clean setups, very textbook. But let's go ahead, man, and let's tear this dollar apart. All right, let's tear this dollar apart and get ready for the upcoming week, right? I actually want to use this most accurate dollar chart for real quick. All right, and this is the first time I'm looking at the charts for this week. All right, so we doing this thing freestyle. We're going ahead and getting ready. That was last week's open, the week before. All right, so again, on the dollar, we had saw them on May 30th, the end of May. We saw them trade above the buy side liquidity from March here, right? These highs from March. We saw a bit of a trade above that, literally just some wicks, right? And then that first week of June, which was really the last week of May, it was all the same week. We saw the big boys come in with an engulfing candle to the downside. So that's why going into last week, we wanted to see them respect these levels and go ahead and trade below the sell side liquidity here. Now, I'm going to go ahead and wipe my chart since we've clarified that. And I'm going to put this high here one more time. And I think I can close out my Brave now, so it's not slowing my computer down and Canva. My computer be acting up. All right. So yeah, so that's that weekly buy side liquidity right here. We saw them trade above it. Now, given that they took this weekly buy side, I still haven't seen them deliver to anything on this time frame yet, right? They did come down below this daily daily levels right here. So that's something that we can keep in mind from that first week, right? So I'll keep that in mind, actually, this daily sell side liquidity here. But now if I go back up to that weekly, oh, this is daily buy side liquidity. That's what threw me off, right? If we go up to that weekly, like I was pointing out last week, this is a lot of bullish momentum, right? That was never traded back into. Okay, so wouldn't be surprised to see us dip down just a little bit further into it. And when I throw my fibs on it, just so I can get an idea of where the premium or where the discount is on this move, the 50% of that buy up would be at 102.56 on this ice chart. So I'm kind of just gonna put like a blue line right here just to annotate that, right? We're gonna put blue line, right? Because ideal zone for buyers is gonna be 50% of anything. Like if you go to the mall and they're having, a 50% off sale, that's when you really get excited to buy something, right? When it's 50% off. So kind of just annotating that zone right there. And after seeing them trade below this daily sell side liquidity, I mean, we are getting some pushes up, but nothing crazy yet. So it's only Sunday though. Let me also annotate this gap right here that we could see on this chart. And let me go down to the 4-hour time frame. Now that we traded below this sell side liquidity here. Yeah, they gonna have to show me something. Like this is nice because we're starting to see engulfing candles out of this zone, right? Like we have this big engulfing, right? Created this order block here, and again, another engulfing candle here, order block here. But compared to this big drop that happened, this isn't really this isn't really I don't know how to put it. This isn't really impulsive, right? When you compare it to this. So I kind of, like I said, we have FOMC on Wednesday. We have CPI on Tuesday. I'm chilling, right? I want them to show their hand, especially on a week like this. I think, like I said, in the last YouTube video I dropped, I feel like sometimes new traders or maybe people who are not, maybe you're not seeing consistent results, whatever the case is. I feel like sometimes it's because, at least for me, it was because I was like constantly in a rush to get the market right instead of letting the market really like show its hand. You got to understand the market is going to move. The market is going to move every single day. If the market moves and just because you weren't in the move, you feel like you missed something, you're going to be feeling that way every day of your life. The goal is not to just be in the market moves. The goal is to be in the most high probability moves. All right. So even though we get in this push up right now, it's nice. But what I would really want to see is on the daily time frame, I would want to see them, like, let's say today's Monday. So this Monday candle, I would want to see this thing just be straight bullish and engulf this sell candle here from Friday's candle. Right? That's what I would want to see. I would want to see them just straight came under this sell side liquidity on the daily time frame, give us a big bullish engulfing. But that's from Thursday. I'm sorry. From Thursday's price action, I would love to see them give us a bullish engulfing off these two candles right here. But as of right now, I'm not really, they don't really have me convinced. Like I said, As of just the way things are going, I wouldn't be surprised to see them continue to trade just a bit lower, especially until that interest release on Wednesday. Because if that interest release comes out as they raised interest rates, well, I'm just gonna be honest with you. Higher interest rates equals higher dollar, right? So if they raise interest rates, that's good for the dollar, right? That means, if inflation is just continuing to get higher and higher, that's bad for the dollar because, like I said, it makes the dollar less valuable. But when they raise interest rates, that's what makes the dollar valuable, right? It adds value back to the dollar because people are going to want to hold on to their money because interest rates are higher. They got bills to pay, debt to pay, etc., etc. So I would anticipate that for the week to start pre FOMC, them going ahead and start trading deeper into this sell side, seeing them trade deeper into this sell side, and I mean ideally right now this gap, this imbalance, this fair value gap right at that 50% is catching my attention. But I think it'll be a lot easier for me to be confident on the dollar as this week unfolds, right? But just based off of our anticipations from last week, which was bearish, right? We saw the bearish engulfing coming here, bearish engulfing coming here, swept that daily sell side. I'm still with the bearish momentum until I see bulls come in with some sort of anything, right? But like I said, just looking at the higher time frame, it doesn't really look like this, bulls again would want to come in to this until we get some type of a discount, right? And that would be below, like I said, the 50% right here. So just keep an eye on that 50% there. And we're going to go ahead and take a look at NASDAQ. Oh, I forgot about good old USD CAD. But USD CAD did not come up to my premium level. USD CAD just went ahead and did her dump, as we'll call it. Did anybody drop a thing? No. Okay, cool. So we just gonna stick to my favorites today. I'm with it. I'm with my favorites. All right. So yeah, looking at NASDAQ, we did go ahead and see them trade above this weekly buy side liquidity. What about the monthly? We right at some monthly buy side levels. Got a monthly fair value gap. You could argue right here, right, or imbalance. Better yet, sitting right above it. So keep that in mind. I'm gonna put this as a daily buy side level over here. All right, so if the dollar is gonna continue to drop just a bit, like I said, that kind of gives NASDAQ a little more wiggle room to trade higher. But just being aware, now that we've reached these higher time frame key levels, like a area of weekly buy side liquidity or of daily sell side or daily buy side liquidity, I'm starting to pay attention now to, can I, just like I pointed out on the dollar, are we going to get some sort of displacement? Like, are we going to get some sort of obvious sign that the big money wants to enter the market for the opposite direction, right? Now, I mean, clearly, our eyes it's probably clear to your eyes like it's clear to my eyes. All right, we got some sell side liquidity here on NASDAQ. And I think just below that, all right, we have gaps here. They did just leave a gap here. So they're leaving a lot of imbalance in price action for them to deliver to. I think it's just going to be a matter of when they're going to deliver to that, right? So like I said, weekly buy side objectives traded to here, same thing. You feel me? Just wait till after CPI, wait till FOMC, see how they go ahead and introduce themselves to the market is how I want to look at this. And I'm just going to take a look at the bonds market really quick, guys. Kind of went over this a couple weeks ago. Bonds market has been in a bit of a consolidation, and even ICT himself said, it doesn't look like big money off of this chart has wanted to pick a side. We've seen just a bunch of back and forth as far as the bonds market goes. So But looking at the daily time frame, I had this fair value gap mapped out for them to potentially trade back into this, I guess we call it a premium level. And seeing them trade up into that level, kind of left right here, May 29th, and they left a nice little order block there for us to pay attention to. And then we saw them give a lower low here, and then we saw them trade right back up into that order block, and now we're starting to get a bit of aggression away from it. So I would love to see how they go ahead and respond to the FOMC this week. So yeah, guys, I wouldn't be in a rush. I would not be in a rush. I mean, if you're a scalper body, scalp your life away. But I would really wait for the markets. I'm really going to wait for the markets to make it clear to me what they actually want to do now that we've reached these higher time frame levels going into the week. But that's what I would point out. We are at these higher time frame key levels. Pay attention to those. Same thing as I pointed out on GU, and I'll go ahead and wipe my chart on GU. All right, GU, we're sitting right at May's open. Plenty of accounts get blown on weeks like these. I would know. I'm just saying. Experience is the greatest teacher, right? So yeah, same thing for GU, trading into this higher time frame liquidity level. May's open. Are we gonna see on the daily, on the 4 hour? Are we gonna go ahead and see some strong bearish entries coming in, right, to show me that smart money is entering the market? So going into, like I said, Wednesday evening, post FOMC, right? Maybe even that 2:40 to 3 o'clock kill zone will be the first areas that first timings that I'm paying attention to execution wise for the week. And you can go ahead and see right here. Now, I will say this, right? The markets tend to wait for FOMC, right? Especially on a week like this. Now, if CPI delivers, and based on CPI delivering around that 9:30 to 10 a.m. time frame post CPI, the markets is showing more clarity in their deliver after CPI. That might be the only window. I'm just being honest for me personally. But after that, or even if you see continued consolidation or just things that don't line up, then for me personally, is the markets we're just gonna wait till after FOMC, and then the party begins, right? So I won't be in a rush this week. And we're going to a river barbecue on Tuesday anyways, you feel me? So that's gonna be good, right? Like stuff like that happening, I don't feel bad on weeks like this. I don't feel bad. So yeah, we'll want to see some sort of strong bears come in on GU for this week. But not just GU, man. Everything, like everything is at key levels. Everything is at a key level. USD JPY, we just traded below sell side liquidity from the beginning of the month, or just below the monthly open. Monthly open for July was here. So we just now traded below that monthly open, barely swept buy side liquidity from that first week. And looking at the lower time frame, we've seen them go ahead and give us a bullish engulfing away from that area. That whole area in itself was a discount level. So if the dollar is going to go ahead and give a nasty push up, it looks like USD JPY is setting up for it well, right? But again, this in itself is still just really choppy price action. Like since Thursday the 1st of June, literally just back and forth price action. It's nothing sexy, man. It's nothing sexy. I'm not don't hurt yourself in this. Do not hurt yourself in this. We are setting up for some nice reversals, is how I see it right now. Just gotta wait for the confirmations, you feel me? Let's see, maybe GJ. Yeah, even GJ, like I said, has traded above these highs that we were targeting. So now they're sitting in this monthly, weekly fair value gap right now. But she's very bullish. I'm not gonna lie, GJ, I wouldn't be surprised to see GJ continue. Like, just to continue the way that she is moving right now. Yeah, the way she's moving right now, even especially if you look at the monthly time frame, see the way May closed bullish. You got June coming in. I wouldn't be surprised to see and GJ continue to the monthly buy side liquidity. Yep, and then I actually have that order block up there mapped out already. But yeah, I would not be surprised to see GJ continue being bullish. Keep that in mind. Especially if we're going to see Bank of England go ahead and raise interest rates and Bank of Japan is not. Just things like that kind of show hand on it. So yeah, that's what I say on GJ. Okay, take a look at Ethereum. I'm glad you mentioned crypto, bro. I'm glad you mentioned crypto. Baby Ethereum, man. So it's interesting. My bias on crypto right now. With me expecting a bullish dollar, you would expect that I would be expecting these things to drop. And I am, right? I do think I do want to see more lows on crypto, right? Excuse me. We got the lowest point on crypto. The sell side liquidity on crypto right now is sitting from last June. So that, just looking at the monthly time frame, catches my eye off rip. That daily sell side liquidity down there. Just because looking at this chart, I mean, there's nothing that says we just stop here. Right? When they traded down here June of last year, it's like the only the only thing that you could see from this is that this big behind order block here. I guess that would make sense, right? So you can see that they sold off January 2018, boom, dropped, and then we got this big engulfing move that went ahead and took all of that. So it would make sense to go ahead and see them trade back to the top of that and take off. However, again, there's a lot at play here, and this sell side liquidity right here, that looks sweet, and it still would be inside that order block, right? Generally, when you see an order block, it's like you don't want to see them really trade below 50% of that, but below the 50% of it. And I feel like they got a lot of room to respect this order block, this big drop. I feel like they got a lot of room to respect that and still sell off lower to this sell side liquidity below 1,000, right? Seeing Ethereum at 800 again. So that's kind of, I wouldn't be surprised to see them continue to sell off. Looking at the weekly time frame, you can get an idea that and let me look at the monthly one more time. All right, yeah. So looking at the weekly time frame, we could see that they took buy side liquidity right there. All right, we can see they took weekly buy side liquidity here. Right, traded above it, and then we got aggression on the daily. Right, bearish move, came back up into the fair value back. Bearish move, right? Strong bearish signals away from that area, almost like they loading up. So this last launch up right here, I guess you call that an order block, right? Boom, got a little order block right there. You saw them drop under it, trade back into it, start to sell off, trade back up to it, respect it, sell off. So I'm not gonna lie, I can see this nice little range being targeted, right? These lows, these are the overall lows right here that I could see them targeting. So I'm looking bearish on Ethereum right now, just after looking at that higher time frame. But for this week, let's see. May 11th right here, some lows, saw them trade below it, wick, come back higher. They respected respected the lows down here, the wicks down here. Yeah, I mean, overall bearish, but I could definitely see them trading up higher, get them some buy side liquidity so they can even continue their move. So overall bearish, but from where they're at right now, depending on how this candle comes in, I don't trade Ethereum consistently for me to know the best timings on it, but it is definitely giving a timing situation. So if we see an engulfing candle, right, up from these rejection blocks, from these wicks down here, if we see a big engulfing candle out of this, then I would definitely pay attention to that as potential entry opportunities to come back up into this 1815 level, right, into these lows, right, and regain this imbalance that they've left. See them come back up into that, and then from there identifying whether they've gotten what they need so that they can actually go ahead and trade lower. But just watching how they've moved from up here, came back, swept this buy side liquidity, came here, gave a full engulfing lower, came back up, gave us a high, dropped down, swept that high, and then we're dropping down again, right? Kind of, similar thing, right? Just seeing them trade back up into this fair value gap potentially. But overall, it actually looks pretty bearish. Not gonna lie. But the reason I had said that it's interesting, my take on crypto, because in the past, when people started selling off stocks, they started buying crypto, right? So even when the markets were crashing, when the stock markets were crashing and stuff like that, we were seeing crypto start to gain some type of bullishness or go on a bull run, because once people can't trust the companies or they feel like they can't trust the stocks, they kind of just run into the crypto market. But the problem right now is not stocks. The problem right now is not that they can't trust it. The problem right now is that people are about to not be able to afford to invest type of time. So that's the reason that I can kind of stand with what I'm saying. Like, I see it going bearish as well, just for right now at least. I mean, these things have died over the past week or so. Even my sand position, right? I had got into sand here. They gave me my first leg up to the buy side liquidity. I took a little bit of profits, and then they dropped, right, straight down 36 cents. Right now, I'm not gonna lie, I still see this, especially when I talk to you guys about like metaverse versus crypto, is that I feel like it has a little bit different type of utility. So I could definitely see them still having hope in this metaverse token, but hope ain't gonna get it. It's not gonna cut it in the markets or in finances and stuff like that. But you can see on the weekly time frame, straight bearish candle, boom, drop, sweep weekly sell side liquidity from this was from January 1st. Oh wow, I didn't even peep. They traded below the yearly open. Yearly open right here on Sandbox. Yeah, I actually bought some more today. Shameless, you heard? Shameless. I'm dollar cost average my way in, right? Saw them trade below the yearly open, sweep this weekly sell side liquidity. So now on the lower time frames, I'm just looking to see just the same thing I just pointed out with Ethereum, right? Do we respect, right, these blocks of orders after sweeping an area like that? And actually go ahead and trade higher from there, or even if they were to sweep sell side liquidity a bit here, and then on the 1 hour actually give us a strong order block to respect. Yeah, like see them sell down below here, right, into this again, and then give us an engulfing, and then from there, at that point, better buy opportunities. But I'm not sold as far as Sandbox. I'm not sold on them wanting to just sell off yet. Especially just the way that this looks, right? With them sweeping the yearly open, sell side liquidity here. It looks very liquidity grabbish, right? So again, same thing as the Forex pairs and the indices, I would need to see some type of displacement or heavy buys up from this zone for me to be able to say, oh yeah, for sure, I want to get into some more positions. But right now, crypto as a whole is just, it's not looking, right? It's not looking good. When you look at Bitcoin, I have been pointing out for a while though that I don't see Bitcoin falling until we at least reach like 40K, right? Like 38 to 40K, right? Just coming above the buy side liquidities and then seeing us drop off. So it's just Ethereum looks so ominous right now, just to be honest with you. It just looks so ominous, Ethereum does. But same thing as I just put down on Sandbox when it comes to Ethereum. Because you do have a lot of just straight imbalance up here on Ethereum. You feel me? And then you got the buy side liquidity there. So I definitely would say, like, if you see a buy move, man, look, you might see it better than me. But at the end of the day, yeah, I'll be paying attention to how they respond in this down in this order block right now. He said it's been bearish since mid-April. Yes, it has, sir. Yes, it has. But the question being, why? You know, where are they looking to deliver to? Where are they looking to deliver to? And yeah, here's that high you were talking about in mid-April. Feel me? But that was after, that high was after they swept down into nearly this sell side liquidity from June of last year from their low. They swept right back down into that. And then we got an engulfing candle out of it. Saw them trade back into the engulfing candle and then give them another acceleration higher, closed above the high, right? So even though they've been bearish since April, this looks like in itself, it could really just be, you know, again, like a pullback on the way from sweeping this daily sell side liquidity to trading back into the premium of this entire drop, which would be, again, up there in that fair value gap that I just put down, right, in this area. So depending on how Ethereum responds where it's at right now, sweeping below these lows at 1737, if we see some type of aggression up this week from this area, then it's very possible that they could actually be setting up to go ahead and target that fair value gap on a higher time frame, sweep into those levels above, above 2,000 before going ahead and crashing down just a bit more, alongside Bitcoin and everything of that nature. So yeah, that's what I'm kind of seeing when it comes to these guys this week. But like I said, guys, be careful. Take your time this week. Don't go sacrificing yourself into the market. CPI on Tuesday, FOMC on Wednesday. It's going to be funky, right? It's going to be funky, and definitely allow the market to go ahead and set up and show you what it wants to do. Because I'm telling you, weeks like this, I've blown accounts. Weeks like this, I've lost funded challenges, literally just because I wanted to use my skill, right? And you can definitely be skilled enough to catch the CPI move, the FOMC move. But I promise you, if you're skilled enough to catch the CPI and the FOMC move, you skilled enough to hit that shit one shot kill after they pass, right? And the market is very clean. All right, so if you see something clean after CPI, then okay, makes the most sense. But typically, if nothing forms right after that CPI release, then it's because the market's holding off until after FOMC. And the way that we're in these high key levels right now, I wouldn't be surprised to see it, right? Everybody's waiting on that interest rate release to be able to say, oh yeah, this is going to happen, that's going to happen, oh, I'm going to do this, oh, I'm going to do that. So just wait till the bodies hit the flow, man, and then come in. I'm going to, even, a lot of people, they feel like they're missing out if they didn't go ahead and trade the first couple days of the week because of releases like this. But the way I see it is that the weeks where I was able to be patient and wait till after the releases happened, I was able to be a lot riskier because I didn't trade 3 days. So I still have my whole risk. If I'm willing to risk 4% for the week and I only got 1 trading day or 2 trading days, I could risk 2% per trade. You feel me? And in a high probability zone or in a high probability frame of the market, I mean, those are the type of setups that help me pass an evaluation in a day, pass an evaluation and, a whole challenge in 2 days. You feel me? So be aware of that, guys. Do what you do best. If this video helped you at all, I keep forgetting to do it throughout the video, but I'm gonna tell you right now, like this video, subscribe to the channel, share this video, and comment for us. We really appreciate it. If you want to be able to learn with us live, trade with us live, be a part of the community so that you can actually be around like-minded business owners and entrepreneurs that are learning this skill set so they can reinvest in themselves, in their family, and in their businesses, and learn this so you can become a reliable and professional skill set. Tap in with us. The link is in our bio, so you can go ahead and join the open access community right now for $50 on the month to month, right? Before the beta access closes. Okay, so we appreciate y'all, and I'll see y'all on the next market outlook next Sunday. And if you're in the Traders Guild, I'll see you tomorrow on the Q&A at 6 p.m. Let's get it.